We have been falling for quite a while now. Bitcoin used to be at 125,000 US dollars. We have come down by more than 30% since then. The question is this potentially a time to buy the bottom? Is there a way to time that bottom? Let's have a look at some approaches that used to work in the past that might continue to work in the future as well. Now, here are some first positive signs. This is the 2-year moving average multiplier. We are looking at the 2-year moving average of Bitcoin. That's the line in green. And we've got a multiplier, a 5x multiplier, showing potential tops with the line in red. We're getting very close to that moving average again. It's at $82,000, and while it didn't necessarily mark the perfect bottom in prior bear markets, it did give us a hint when it might make sense to start dollar cost averaging again. Last time when we crossed the moving average, we were at 35k. The bear market bottom was at 16k. Now, if we have already entered a bear market, we clearly haven't yet seen all the selling. Here is the escape top indicator. It's published by AHR999X, that's his Twitter handle, and it tended to be close to a value of 10 whenever we were at the end of a bear market. That was true in 2018 when the miners capitulated. It was true during COVID. It was also true after the Terra Luna and FTX and Three Arrows Capital collapse. Currently we are not at 10. The value is rather at 6. So there is potentially more capitulation ahead. Now, many of those approaches are useful, but they're definitely not perfect. Just because a system worked in the past doesn't mean that it has to work in the future. The 200-week moving average is one of such examples. In the past, Bitcoin always bottomed at the 200-week or 4-year moving average. The idea was also quite reasonable. There is the 4-year cycle, and there is the halving every 4 years, where the newly issued liquid supply gets cut in half. And so, for example, in 2022, everybody expected that the Bitcoin price would never fall below the 200-week moving average. But history showed differently. Bitcoin did go below. Again, Bitcoin hit 16k, and the moving average at the time was at 24k. That was a 20% drop below the expectation of the model. Here is the Puel multiple, an estimation of how much money miners are making. Whenever this is negative, this tends to be the end of a bear market. Again, we are not yet in the green zone. The realized price, or the average cost basis, shows whether or not the market is currently in net unrealized profit or in net unrealized losses. If the current price is above the realized price, people are in gains. If the current price is below the realized price, people are in losses. And historically, it was always the best time to buy into Bitcoin when the average market participant was in losses. That's when nobody wants to hear about crypto anymore. That's when we want to buy. That was true after the Silk Road and Mt. Gox collapse. It was true after the miner collapse. Again, also true during COVID and after FTX. Currently, the realized price is at $56,304. I like this metric because we can't really calculate this for anything outside of crypto. This is an insight we only have in crypto. We can only say if most people are in profit or in losses based on on-chain data. And it's useful because if most people are currently in losses, but still there is long-term conviction in the asset that over the years it will appreciate, we tend to see less selling pressure. When we are above the realized price, some people might take some profit just to rebalance portfolios, just to realize gains. And so as per tendency, we tend to see turnarounds when people are in losses. There's less selling. But unfortunately, we're still quite far away from that turnaround point. It's not an indicator that's perfect in timing the absolute bottom, but it is an indicator that's pretty good to tell us when to go very heavy for dollar cost averaging. If you're getting value out of this content so far, then feel free to give this a like. You can also subscribe because I publish videos regularly. Of course, any support is very much appreciated. It will help the channel grow. There are other approaches that also worked quite well in the past. There's the CVDD, so the coin value days destroyed accumulation, and there is the balance price, a slight adjustment to the realized price. Those two models give us a floor in Bitcoin of 46 and 42k respectively. One of the reasons why this bull market didn't feel like any other bull market is because the long-term holders continue to sell into the market. That's why we never saw this parabolic rally. There was simply too much profit taking. The market is cooling off since Bitcoin hit 100k. This is the realized HODL ratio, so it measures how much transaction activity among short-term holders is there currently versus long-term holders. When this is very high, then there is a lot of short-term trading activity, a lot of speculation. When this is very low, then only the long-term holders buy into Bitcoin. And we see how short-term holder interest is already fading since Bitcoin hit 100K. We still had another leg up to 125, but as we continue to see less and less short-term holder interest, the price is likely going to continue to drop. We also see here in the net unrealized profit and loss, which is currently at 34%, that if we have entered a bear market, we are clearly not yet at the bottom. We want to buy when there is net unrealized losses, not net unrealized profit. The selling by long-term holders is absolutely unprecedented, especially given that the price action of Bitcoin didn't really justify that much profit taking. In the past, we only saw that many coin days destroyed, so that many dormant Bitcoin getting moved. When Bitcoin rallied really quickly, right? It went from $200 all the way to $20,000, a 100x return. This is when the long-term holders sold. We also saw quite a bit of selling when Bitcoin went from 3.5K up to 40K. Then over here, we had an altcoin season. But now this time we see a lot of profit taking already when we hit the old all-time high. And that profit taking continues. And it's now at a level we usually just see at the end of a bull market. We see it every 4 years. Here's a more micro view on the topic, the long-term holder supply chain. When this is negative, the long-term holders are selling off. And I stay cautious until this turns positive again. At least on the micro, on the shorter time frame, I want to see the long-term holders buying again. I want to see how all of this selling pressure stops, because only when the long-term holders stop their selling can we see a real shift of momentum. The ETFs won't help us. The ETFs are very small relative to the long-term holder supply chain. So really, it's all about the OGs. Are they believing in the 4-year cycle? They continue to realize their gains because they have bought on average below the current price level. They might already stop selling once they get into the negatives. The last few days were already slightly better, as in the selling has slowed down, but we are still in selling mode. So let's see what happens over the next weeks. Maybe we can continue the overarching trend, which is still our move from 16K to 125K. But as a prerequisite for that, we definitely need some optimism by the investors that own most Bitcoin. And that's clearly the long-term holders. Now let's look back. In 2025, the average Bitcoin investor pretty much got nothing. There were no gains, there were no losses, went slightly down by 8% roughly. The average altcoin investor, however, suffered much more. This is the performance of smaller altcoins in the last year. Many of them are down 70, 80, or even more than 90%. And that's really why sentiment is so bearish. It's most people owning many different altcoins, having a diversified portfolio of alts, and then underperforming massively, while other risk-on investments are actually doing fine. The Nasdaq 100, for example, appreciated this year. The problem really is that those smaller altcoins get hyped by influencers. YouTubers say that you should buy this small altcoin or that small altcoin. You're taking on much more risk than you should. And then in the end, you end up losing 50, 60, 70, maybe even 80% in the span of just a single year. If you used leverage, you probably already lost everything. This is the others market cap. And there was the flash crash on October 10th, where the average altcoin fell by 48%. So if you had leverage above 2x on any altcoin, you lost it all. And this was all just due to mispricing, right? We went back up quite quickly again. Those purchases, of course, had not been made by the average Joe. This was algorithmic trading. And now those algos are selling off their allocation over time as well. Many projects went from the billions of dollars, Bonk for example, to just a few hundred millions. 4 billion down to 600 million. Or here, SPX 6900 from 2 billion down to 400 million. Or over here, Fartcoin also above 2 billion. Now just slightly above 200 million, a drop of 90%. Or here, Dog with Hat 4 billion down to 300 million, a drop of more than 90%. Now, interestingly enough, you are still watching crypto content, so hopefully you haven't lost everything. But if you're just in Bitcoin and you have lost maybe 8% this year, that's not ideal either. It makes sense to change approaches, to not try to find the next 10 or 100x altcoin, because this is not the market to try to make those gains. Currently, the attention on crypto is very low, and it does need a lot of attention for those smaller altcoins to rally. This is not the time to buy those very risky bets. It's better just to focus on long-term compounding. Now, how many of those other YouTubers that you're following in crypto is actually willing to share their own data, their own performance data over time since maybe starting to trade? I actually do not know a single one, but feel free to comment down below. I am willing to share my data though. This is my trading portfolio over time. This is a monthly chart, and this is going up for two reasons. It's going up because I regularly dollar cost average into that portfolio, but it's also going up because it outperforms just buying and holding Bitcoin. This year I did make money. So have a look at this. This is the monthly performance versus Bitcoin over the same time period. Every dot here represents how much I did better or worse compared to Bitcoin in that specific month. And what we see here as a dotted line, that's the 12-month moving average. Now, the overall average of all of those dots, that's 1.9%. So over the last 50 months, I have on average outperformed Bitcoin by 1.9% per month. Now, I don't just show this in order to brag. Of course, I do want to show my credentials here, but on the other hand, I also want to show how much volatility there is. There are some months where we underperform Bitcoin. There are other months where we outperform. The long-term average is what matters, and that's realistic. 1.9% per month is definitely achievable. The 10x or the 100x might be achievable with one position during a bull market with a specific lucky bet, but it's definitely not realistic long-term for an entire portfolio. And I don't just want to share my own performance. I also then started in July of 2025 a 5-month copy trading beta test. So every annual member of premium of this channel was able to deposit into that pool, and whatever trade I made was automatically reflected in the portfolio of the members. Now, this was a very actively managed project, and so here the outperformance versus Bitcoin is more than just 1.9% per month. But that's what diversification gives us, right? It gives us a bit more stability, but also muted returns. But here's where I think I'm different to all of those other influencers that only talk, but that don't really show their data, that don't really prove themselves in the market. If all of those influencers are so successful and they make those 10x returns so regularly, why don't they just open a similar kind of copy trading pool and then take a cut of the gains? The reason why they don't do this is because they don't outperform. They simply just make content on YouTube and then get some advertising money by YouTube or potentially even by individual crypto projects, right? Very often when those small altcoins get promoted, it's just because the influencer got a kickback from the project. By the way, I never took any money from any crypto project ever. I only have the premium membership of this channel. I have the affiliate link for Ledger. I've got the affiliate link for TradingView, so those are two tools, and I've got an affiliate link for Hyperliquid. That's a platform that I use myself where you can reduce your trading fees. But I've never taken any money from any project in order to promote their token. And so if you want to turn things around, if you want to start getting your money back again, you probably have to also follow a different approach. Now, I'm not a magician. I cannot see the future. This is not how I make this outperformance. I simply just write the market structure. And the market structure for many altcoins is very disadvantageous for most retail investors. Very often the supply of an altcoin tends to grow over time. This here is the example of WorldCoin. But very often the demand doesn't grow as quickly as the supply. And that leads to underperformance. Every single week we've got roughly 700 million worth of unlocks. Bitcoin, on the other hand, has only 284 million worth of unlocks. So the altcoin market has unlocks that are roughly double the size of Bitcoin. Yet Bitcoin is more than 9 times larger in market cap compared to the altcoins. So we are looking at roughly 20 times the selling pressure relative to the market cap for the average altcoin relative to Bitcoin. This is why things like WorldCoin over time go down versus Bitcoin. That's why we see charts like this. This is WorldCoin relative to BTC. And so my approach is not trying to find the outlier here. When everything goes down that much because the early investors and the insiders sell, then I want to get part of that money as well. I am flipping this chart around and then it looks like this. This is Bitcoin relative to WorldCoin. There's a way to get exactly that performance. Had you opened that position at the beginning of the year and you just held it until the end of the year, you would have made more than 300% return. Now this is of course a positive example and there is a lot of volatility in here as well and there are ways to get stopped out. That's why I'm showing the actual realistic returns that are achievable, that I've achieved for the premium copy trading vault. And that's why I also share my alpha over Bitcoin for the entire crypto portfolio. 1.9% per month is realistic, but the right position can go up quite a bit. More than 300%. So there's really no need to try to find the next 10x meme coin. I have made several tutorials on this approach, how to set up the trades, how to do proper risk management, etc. And of course, I'm sharing my own trades as well. For example, over here, this is November 24th, where I entered a short on pudgy penguins. So I want to bet on relative valuations. We want to bet on one altcoin doing worse compared to another altcoin that might have high correlation to that alt. But more of the theory, of course, is explained in the videos. And so that's truly how I believe things can be turned around. It's not following the same kind of recipe, the recipe of disaster, but it's instead following the market structure. The odds are stacked against the regular retail investor that just buys an altcoin. Don't be like the average Joe. You want to have an edge in the market. So here's the premium membership. It's currently $125 per month. If you want to be part of the next copy trading pool and you simply just want to deposit your money and set and forget and I then trade for you, then you might consider the annual membership. Those 17% were achieved over 5 months. If we annualize this, that's more than 40% after fees. So the break-even point is somewhere at around $3,000. That's for annual if, of course, the prior returns will persist. That's a big if. Nobody knows if we can keep the performance. But again, I do think that we've got the odds on our side. If it's the first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.